Bonds are tanking globally as countries plan stimulus spending to fight the virus. European sovereign bonds now leading the global debt rout. For more, Bloomberg's Dani joins us now. I mean, these are really unreal moves that we've been seeing, Dani.
Yeah, astonishing whiplash that market players are contending with here, Alex. And we really want to think about this in a binary term of saying, hey, there's global turmoil, so people are going to be buying bonds, they're going to be buying these haven assets. That's not how they're behaving. Leading the pack lower today are European sovereign bonds, the UK, Italy, France, all unveiling their massive stimulus plans. So it's incredible watching the yields on these bonds, BTPs, bunds, whatever have you, surging today. U.S. 10-year yields also following the pack, moving to their highest since the start of this month. Now, what traders fear here is the debt deluge that's going to hit markets as more bonds are being offered and this fiscal project as stimulus continues on. Now, stocks also moving lower today, really just pain everywhere in the market, especially if you're long bonds and long stocks, which really has been the case for many of these days. As soon as Europe came online, we saw U.S. futures hit their limit down. Another day of U.S. futures hitting a limit. We're almost becoming desensitized to these moves. Does a 3-4% move up or down mean the same anymore? Well, it should to traders because things can certainly get worse from here. We see volatility really across markets continue to skyrocket. And what we might have is what's coined a volatility doom loop. It sounds ominous. It certainly is. JP Morgan calls this the biggest VAR shock since the Lehman crisis. What occurs is we have these turmoil in markets. That means both realized and implied volatility skyrockets. And you get a whole swath of market players, be it asset managers, market makers, or dealers, say, hey, these are hitting my risk limits, and now I need to step back from markets, or even worse, sell what I already own. And that contributes to the volatility. So that might certainly be part of the cause, part of why we're seeing volatility skyrocket. And more than anything, we're getting these periods of liquidity blackouts, which really allows markets to be punched around and to hit their limit down movements as soon as Europe, for example, comes online, Alex.